Hey, good morning. It's 7 a.m. in Thailand. I'm just getting up looking at my charts. So we have got the dollar yen hitting some really good support. Got a trend line here going back to September. We bounced off it yesterday. As you know, I had my buy level down at 127.50, 127.25. So we've bounced right off there, oversold on the 4-hour chart. So that helped to encourage the buyers into the market. Actually, I should have started by showing you this weekly chart, which goes back to, 2007. There's a real nice trend line joining the peak there to the peak in 2015. And this trend line, when carried through, gives us this big support level down here. Also, there's a 50% fib when you take the low from 2020. So we've got fibs, we've got trend lines on the weekly chart, and we've also got trend lines on the 4-hour chart. So lots of support, oversold on the weekly as well. We're oversold on the slow stochastic, just getting oversold on the daily chart. And, well, you know what? We could eventually, we're not going to get there quickly, but who knows? We could even get as far as 133.00. There's a big resistance level there, as you can see, 200 period moving average, although that probably won't be there by the time we get to that point. Probably be a little bit lower, judging by the rate at which it is descending. But we do have a trend line there, and we do have the 23.6% fib. So watch 133.00, 133.20 as a resistance level if we get there over the next few days. I talked about this yesterday, the dollar index testing 50% fib and this trend line, although right now as I speak we're breaking below the trend line. The only thing I will say is we are oversold on the daily chart, quite severely oversold, and we are in a longer term bull trend. So, you know, the idea is to look for buying opportunities in a bull trend when the market becomes oversold and hits a support level, which we are indeed doing. I'd be a lot more comfortable, obviously, if we were holding above 102.48 in the dollar index, but we haven't quite got there yet. We've dipped down to 101.77 yesterday, so we're going to need to push up through today's high. Above 103.30, we would start to look more bullish more positive for the dollar index. We've always got to have a look at the euro versus the US dollar when we're talking about the dollar index, because of course that is the most heavily weighted currency in the dollar index, the euro. I wouldn't say we're seeing sell signals, but we are seeing signs of the market running out of steam as we become overbought on the daily chart. Now, we're close to the 50% fib. 109.40 is the 50% fib, but I'm actually not really seeing a huge amount of resistance, so I'm not going to suggest a short position yet, but I have got my eye on it. Aussie dollar is also overbought with a slightly negative candle here with new high, lower close, bit of a red body on that candle. Again, not something I would take seriously as a sell signal, but just a little bit of a warning as we hit that upper trend line. That trend line is 2.5 months old, so it's significant enough as we trade within this channel, so the Aussie dollar could certainly turn lower today. Gold's been roaring away, hit my next target of 19.25, got as far as 19.29. Again, a candle that indicates perhaps we're running out of steam. We're very overbought on the daily chart, but we're not hitting any particular resistance level where I would be thinking about a short position just yet. I'm going to see what develops here. We had a doji yesterday, probed up, probed down, closed almost unchanged, small red body. So all I can read from that now is that we may have run out of steam. We may get a little bit of a correction to the downside, but I don't see any reason for a short position just yet. At the moment, I would still be interested in buying into dips in gold at support levels and seeing if we bounce. Canadian dollar versus Japanese yen is also getting very oversold on the weekly chart. We've had quite a dip. Testing the 100-week moving average, we're holding it. It's a good support level. I talked about this yesterday in the hours group. Let's have a look at that daily chart as well. 500-day moving average. I need to adjust my Fibonacci levels slightly. But you can see, testing a good support level here, oversold on the daily chart as well. There is a good chance Canadian dollar can have a little bounce now against the Japanese yen. Here's one thing that could help the dollar recover. We are hitting very good support. We've got a trend line going back to March of last year, so 10 months old. And we have Fibonacci support down here at 3.39. And we've just bounced off there yesterday. What did we get down to? 3.418. So the 10-year T-note yield could be finding good support as we're oversold. Maybe that will start to bounce. Maybe the yields are about to climb a little bit, which I assume would help the US dollar. Don't forget oil, this potential inverse head and shoulders pattern. We backed away from the neckline, which is around 80, 90, 81, 00. We've just got to wait for the pattern to complete. And just to remind you, this is a big one for me, the S&P. Resistance around 4,000 to 40.20. Trend line, fibs, a lot going on there, overbought. Do we now resume that 1-year bear trend in the US stock markets? Is this peak going to be a lower peak than the previous peak? And then we break this support level at around 38.20, 38.00 would be the support level to watch. And if we do reject that resistance around the 4,000 area, That's it for today. If you haven't got your 6 free ebooks, sign up in the description box below. And there's also a free trial of my new FX only signals service delivered on Telegram. If you want to give that a try, there's a 1-week trial available. Have a look in the description box.